Simon, over to you. I mean, it's been a fascinating week or so. We know that the Competition Commission needs to come up with a decision, and it seems that we're seeing sort of them leaning towards coming up with a lot of regulations if Walmart does take that 51% stake in Massmart.
I think we are going to see some restrictions, call them what you will, regulations and the like. I'm not sure it's a good thing. I think it sets precedents. I think it certainly says that perhaps we're not as free as open. I also think there's been some posturing. We had ShopRite last week saying we would import more. Frankly, ShopRite's probably importing. They're getting as cheap as that. I mean, are they telling me that they're not getting me the cheapest baked beans possible already? I think they're already there. I think the question, and let's start with you, Jean Pierre. I mean, if I'm a holder of Massmart, what do? My sense is, I think Massmart's going to bite. I think this is all posturing. They're going to buy 51% of my shares at 148. Massmart's at 139. I think we're going to see weakness because there's been this Massmart premium with Walmart premium rather for better part of a year or more, and that's going to fade away in the short term.
I would agree with that. The share price is trading around 10 Rand below the offer price, but it's only for half the business. So effectively, even though it's trading at a discount, it's still quite expensive compared to the other food and general retailers. So there is some concern about the conditions that are being imposed, and that the Competition Commission is actually getting involved in operational issues of companies.
Yeah. Which is not their remit by any stretch.
Correct. But notwithstanding that, I still think Massmart is relatively expensive.
So you wouldn't be buying at these levels just below 140 Rand, Jean-Pierre?
No.
So not hot.
Not hot.
Tshepo, your view on Massmart at this point, and do you think it's going to be a negative for Massmart if this deal doesn't go through? And it seems that from the South African perspective, we say it'll be negative for Walmart, and from the US perspective, I think that they almost are seeing it as a positive for Massmart.
I think, firstly, I'd jump in first and say it's definitely not hot. But overall, in terms of the deal, I think Walmart's strategy is really to gain some sort of exposure, and we'll probably see them even taking a loss for a little bit.
This is their beachhead into Africa.
Yeah.
They're prepared to take some losses here because they're looking at 52 other countries and 1 billion other people.
Yeah, and I think for the interim, I think it'd probably be very good for the consumer because you'll probably see very thin margins, even if not negative margins for a bit. As a shareholder now, I'd probably be looking to sell, but then again, I probably would have been looking to sell a little while ago.
Yeah, when it was up at 147.
Even before that, to be fair. I think relative to the other retailers, it's looking expensive, and in my view, it's a sector that looks expensive. So to look expensive amongst that is saying something.
And we know you go for those beaten down stocks that look relatively dire, Tshepo, so I wouldn't expect anything else from you. Simon, your view on this, 140 Rand, if you haven't bought into the story now, should you be buying at this level?
I certainly would not be buying now. I think I'm with Tshepo. If you've held this long, the question's kind of maybe why. I think short term, and the next 1 or 2, maybe even 3 years, I think we're not going to get great returns out of Massmart. And if you've got a longer term horizon, I think in the next 12 or 36 months, you're going to pick it up cheaper. I think it's not hot. Great company, but at these prices.
So would you sell at this point? If you were holding Massmart right now, would you sell?
I would take the 139. You still got a Walmart premium in that price.
Yeah.
Yes, you could hold the other half for 148 and the like, but I would take my Walmart premium and head for the hills.
Okay, on that note, we turn our attention to chicken, it seems. Poultry producer Astral Foods' first half year headline earnings per share have jumped 31% to 636 cents as poultry production efficiencies improved and feed input costs dropped. Revenue for the 6 months to the end of March slipped 2% to 4.2 billion Rand as the group's feed division experienced lower sales. Astral Foods expects trading conditions to remain the same in the second half of the year. The continued strength of the local currency should be favourable for the group's high levels of poultry imports. Simon.
We've got a market cap 5.5 billion, a price earnings 11.8, a dividend yield of 5.9%. That's taking today's results into account. Tshepo, let me come to you first. I mean, what we're seeing here, revenue down marginally, operating profit up 23, headline earnings up 31, dividend up 5. Really what they're doing is efficiencies within the business and a bit of luck with them in that the food price went one way and poultry the other. But those efficiencies, and that's what I want to see management do. sort of eke out every cent they can?
Really, really well-run business. I think that's what the numbers tell us. I think top management team who are able to structure the business in a nice way. I think relative to the other chicken producers specifically, their earnings profile is a bit less cyclical, and that's really from, I guess, they've got two forces that generate revenue, that if the one does well in terms of the actual chicken production, then the other in terms of food produce is probably not doing so well. So that sort of smooths out the earnings profile. I think top management at these sort of levels, it's actually looking very attractive, very stable dividend over time. I think it's not just a dividend that looks high now. They've traditionally...
It's always been a high dividend. I mean, I know folks who put high dividend yield portfolios together. Astral and Kumba are typically one of the first two that go into it.
Yeah, and I think given what earnings have done, at a PE of 11 and a bit, I think this is one definitely worth looking closer at.
Interesting to note, I mean, looking at the margins, reflecting an increase to 8.3% compared to 4.9% for the comparable period. And we're looking at operating profit increasing by 71%. Also, when you look at the Zambian and Mozambican operations, satisfactory results out of those two, and then also the disposal of the Mauritian feed operation. So quite a few elements and a lot of activity over the past trading period, it seems.
Yes, and I think one gets a clearer picture if you look at the different segments. Like you mentioned, the poultry segment up 71% on operating profit level. The feed division slightly down, but as Tshepo mentioned, the feed division is an input into the poultry division. So
that down actually they score from it.
Yes, correct. So when the feed division makes less profit, it's a cheaper input into the poultry division. They've had some benefit from relatively stable chicken prices that were depressed in the previous period, and also in the previous period there was a strike in their Standerton facility. So that's why the earnings growth number might flatter them slightly, but still it's a very good operational performance, and one would expect this type of performance to see them through the second half of the year as well.
Yeah, I mean, Chris Cutter, the CEO of Astral, always talking about imports, and it's not just him, it's the industry as a whole, particularly out of Brazil. Strong rand, and in fact they don't use imports, they use the phrase of dumping. Brazil's dumping chickens here. I hear what he's saying, and I know that they're looking, they've made a referral to competition tribunal, they want to get an anti-competitive conduct, they basically wanted to stop. That's just going to boost their numbers. I mean, they're doing pretty good considering that Brazil's allegedly dumping chickens in our backyard.
No, sure, but the two main sources of this chicken that's dumped is Brazil and the US. And that's because the US consumer has a preference for the white meat, and they don't actually like the wings and the drums. So we already have tariff protection against the US imports, and they just want to extend that to Brazil, and it would be beneficial if they can get that, yes.
The company also, during March this year, in fact, implemented a new line of chickens, the new Ross 308 genetic line. Firstly, there's a few things that concern me, the word genetic, and the fact that it's been implemented in the country. And I mean, I haven't seen this line being implemented, but I wonder if it does actually say whether it is genetic or not. And obviously it goes really against the whole organic kind of frame of mind that a lot of people have been thinking about as well. Let's get your sense on this, Tshepo. Look, is this a concern for you? Because
as a consumer personally, probably.
Yeah.
But I think
as an investor, no.
I think what they recognise as different segments of the market. I think that will in particular be of concern to a part of the market. Another part of the market is just looking at cost. So if they can minimise the cost that they're putting through, the consumer will happily buy that.
It's a slice and dice. I mean, they've got the frozen, they've got the fresh, and now even beyond that, they've got the non-free range, I suppose.
The word is genetic.
Genetic. The GM. Okay, let's call it a chicken. They've got the GM chickens as well, and as you say, it's catering to those different markets.
It again demonstrates what this management team knows, and that's chicken.
Okay, and another negative perhaps, Jean Pierre, I mean, looking at the allegation that it's been selling short measure chicken products as well. We know that it's been under the spotlight, and the company says that it has rectified the situation.
Correct, and they got an apology out of the media from that story that was carried, that they weren't re-injecting and reworking chicken as the term is. Just also on the genetic question, remember that the poultry business today is a very scientific process. They measure everything in poultry, and although it's a genetic improvement in the chickens, it's not genetic
mutation.
Mutation and manipulation as some people are very scared of. So this bird is more resistant to getting ill. The bird has a bigger weight gain about the conversion of maize to chicken. So I wouldn't be too afraid of eating a Goldie or festive chicken.
Hot or not?
Hot. The chickens are flying, Astral is hot.
I'd agree with that. I'd agree with that.
Okay, hot. You buying at these levels, Astral Foods?
If not buying, definitely taking a closer look
Okay.
at the numbers, yeah.
And Jean Pierre, you're allocating new money, new capital to Astral Foods?
I personally would buy at these levels.
Okay.
Yes.
I like it. I mean, that dividend yield is chunky, that price earnings is great, and to Tshepo's point, absolutely top management. Chris Kitt and his team really run a top-flight operation.
Fantastic. Let's turn our attention now to the employment industry, if I may call it that. Now, Employment Services Group, Kelly Group, reported a 16% decline in diluted headline earnings per share to 13.5 cents for the 6 months ending March 2011 from 15.9 cents a year ago. Revenue was 4% higher at 1.023 billion rand, while operating profit declined 17% to 18.15 million rand. The group's South African operations combined revenue of 773 million rand was 1% down on the corresponding period, despite revenue growth of 18% from its skills training business Talk IT. The group also announced the resignation of its CEO Grenville Wilson. Simon, bad times, tough times for this industry.
Tough. Market cap 386 million, price earnings 15.5, dividend yield 5.4, and that's from the earlier dividend. They don't pay interim. Jean Pierre, let's come to you first. 90% of their revenues from temporary staffing, and that in the one sense is a great thing, because coming out of a recession, people are a little bit careful. They don't want to employ full-time. They want to take someone by the hour. Flip side is that person by the hour is out the door in a very big hurry. So it's a lot of revenue into an area which is going to be almost, in weeks, maybe the wrong word, but certainly a tough space.
It's a tough space, but the blue-collar portion of that has been quite resilient. The part of the business excuse me, that has that trouble is the permanent placements, which were down quite sharply. And that is pure gross margin, so that it has a very big impact on the business. So Kelly at the moment is a business under pressure. There's also some cash flow pressure. They sold some treasury shares, just over 6 million treasury shares, and they also continued with their debtor securitization plan. So I'm a bit nervous about that.
They've got 151 million debt due in April 2013. Market cap 386, and their debt's a big chunk of it. That to me was a red flag.
Yes, and if you look at their NAV of about 270 million, more than 200 of that is intangibles.
Yes.
So there's only about 60 to 70 million rands of tangible assets against that debt of 150 million. So I don't think it's a very comfortable situation to be in.
Okay, we know that Talk IT did quite well, as I mentioned before, and also K-Log doubled revenues as well. Workforce, which basically serves the blue-collar market, so to speak. Tshepo, the two positives within perhaps a very dire situation at this point.
Yeah, I think taking into account several factors that contribute to this company's earnings, these sets of results aren't horrendous. I think if you consider that a fair chunk of their numbers come out of the US, and you consider the employment environment locally, I think overall there are some positive signs coming out of the numbers. I'd share the sentiment in terms of overall concerns in terms of the debt situation, and I think you're looking at potentially a strong rand for some time to go, so that puts a bit of pressure in terms of those earnings coming through.
What about proposed bills in the country? I mean, we know what we're looking at with regards to temporary the temporary workforce as well. We know the unions have been very vehement about where they want things to head from here onwards, and it seems the government is definitely listening to this, and it is creating an issue. Jean Pierre.
Well, the two big players are Kelly and Adcorp in that market.
And Adcorp has basically said they have the same concerns.
Correct, and they are both lobbying government as well to try and ensure that those regulations don't impact them very negatively. It does seem like that the two big players are the ones that do things the right way, that tick all the boxes. So if regulation does come along, it could actually benefit them.
It could actually work for them, that's what you're saying, because they're compliant, they're not the fly-by-nights.
Yes, so if the fly-by-nights go out of the system, it actually entrenches their position.
Okay, so where does it
leave you, hot or not?
Hot or not?
Well, Kelly specifically, because of the debt situation, I would say not.
Tshepo.
I think within the sector there's other very good value opportunities. Paracon being one. So I think right now not.
Okay, Simon.
You mentioned Paracon.
Yeah.
Kelly, not hot. And it's a couple of issues, but really when I see that debt, that's the one that draws the line.
And I know you're not hot on Paracon either, if I'm not mistaken.
No, I was reserved on that.
Yeah,
I'm being voted down left, right and centre.